Jibin, you there?
Yes, I am.
This is your intro session to retire into the stock market. How are you?
Good, sir. How are you?
Good. There's some feedback. Are you in a quiet place?
Yes, I am.
All right, good. Um, First thing I want to talk about is moving from employee to business. You know what I mean by that?
Yep.
So, like a great part of the training is about mentality. And a great economist once said that the poor use currency. The currency of the poor is debt. They have to borrow money. They can't survive. They need to borrow because they can barely make the ends meet. You know, and so they're always going to be in debt because they have to pay interest. They're always owing somebody something. And the currency of the middle class is labor. They exchange their work for money. They exchange their labor for dollars, making dollars per hour, salary. Also, the currency of the common laborer is money. They have money, but the money by itself doesn't make money. They just spend it, they use it to buy food, they pay rent, and they have no money left. So you have the poor borrowing money, you have the middle class spending money, exchanging their time for dollars. And then you have the rich. What do the rich do? The currency of the rich is gold. But gold also means assets. Because with gold, you can buy, for example, real estate. You can buy investment stocks, right? You can also leverage people. You leverage people by, you know how you leverage people? You leverage people by what? By employees, by employing them. And for example, if you have a business, you can hire 10 workers that can work for you and they're making a product or a service. You're selling it from the business. You have customers. Customers are paying your business money. You're paying the workers what? A small portion. You're keeping the rest as a business. That's capitalism. So you have to look at perspective. You're poor, you're borrowing money, you're middle class, you're working for money, and you're rich. You're using your assets. You're getting passive income on real estate, on stocks, on dividends. You are leveraging people's time, and it's a mindset. And no different. A stocks market business is no different than another type of business. Sometimes people they go to my training course, and they need to take that leap of faith to use their stock market account to pay their bills. Because that's forcing their hand to transfer over from being an employee to being what? To doing what the wealthy does. Because if you're an employee and you're getting money from a job, you just stay there. Even if your investments do well, you're never going to make that leap of faith. You can't have it both ways. And so you can't have your cake and eat it too. You know what I mean? So you need to take a leap of faith. Like I think it was the Cortez who, when he got to the New World, he ordered his men to burn the ships because he was telling them, listen, we're gonna make it here or die trying. When there's no going back. So part of my training is philosophy, is applying what you learned, is taking that leap of faith. And I'll show you how to do it. I'll show you how to do the trades, show you how to make the money monthly, pay your bills, show you the exact option you need. and then you just have to apply it. Is your connection okay? You dropped out a couple times. I've been here mentoring, so I hope what I can do is play this video back for you. But am I coming through so far? Okay, so part of what we do is we have to get a journal. Like, this is a journal. It's not a notebook. It's a journal that you're going to write your notes in. You're going to do 12 sessions, and each session has some important points to apply certain strategies. Trading is about applying principles and applying strategies. And one of the strategies, like we talk about, is a stock selection. Behind me, I have Apple. Apple's good because, like, if you look at the 10-year chart, how do you really lose money on this 10-year chart? You know, not long term, you can't. It's just going straight up. You look at down here, I have the history. It says $30 10 years ago, and now it's $210. So 7 times your investment, sevenfold. The reason stocks are good is because with stocks, you have what's called exponential growth. And if you look at stocks, the stock market today, if you invest in the U.S., not the Mexican Bolsa or the British or Frankfurt or the Japanese Nikkei, you're talking about just the U.S. stocks. There's $56 trillion, and the money flows into the U.S. The U.S. is the biggest customer, the biggest consumer, and the money is here. You can diversify, but I say if you diversify, you can just diversify into like Bitcoin, gold coins, silver coins. You don't need to do other countries, just the U.S. Apple's a good example of a great stock. We use stocks like Apple. There's 3 criteria we look for. One is the 10-year chart. So if a company has had 10 years trading on the stock market, that tells a lot, because it tells what? History of performance. And you can see in the 10-year chart, it's going from the bottom left to the top right. And that's a kind of chart you want, going from the bottom left to the top right. In this case, 7-fold return in 10 years. Okay, so we don't just pick any stocks. You told me that you were scalping. You need to have. I want to show you how to get the best stock selection. Another thing we check for, besides the 10-year chart, is volume. You need to have like at least 2 million volume per day, shares traded per day volume. You can have more. You know, Apple has like. Let me pull up Apple. Today Apple had it's up in after hours to 210. Today Apple had 61 million volume. So like what this indicates, there's so many customers in Apple. The reason why volume is important is because with stock with a huge volume, there's enough investors in there, indicates enough traders and investors that if stock dips, if stock goes down, all those investors that like the stock will rush in and buy it lower because they're trying to buy the value. So they buy it when it dips and it comes right back up, and that saves their ass. And that's why volume is important. Write it down. Volume, 10-year chart. And then the next one I like to look at is PE. PE just really means profits, if it makes profit. I'm showing Apple PE behind me. I have it here, 31. 31 is a little bit highly valued, but I'd rather have a higher PE than no PE. Any positive number is good. The stock should have a PE. Ideally, it should have a PE. It to be one of your best choices. If a stock has a dash or a negative, that means they're losing money. Gotta be careful with the stocks that are losing money. I prefer to have a PE. So, got PE, got 10-year chart, and you got volume. So these are certain things we look for stock selection. There's also, I have a 12 criteria for stock selection, but you can understand that the first three are volume, PE, and 10-year chart. I think that's headed for the right direction. Talked about some stock selection. We talked about some philosophy about being poor, middle class, and rich. Am I coming through? Can you hear me? Jibin? We might need to try to Zoom again if you have some connection. Hey, I can see you. That's better. How are you? Am I coming through? Are you hearing me? For some reason, I'm getting some feedback from your side. It might be my phone, but I don't think so. So let me just continue. I hope you hear me. I'm gonna record this and I'll play it back for you. How's that sound? I'll post it. So we gotta have stock selection. We don't just pick any stock. There's a method to the strategy. We use our philosophy. We apply these trades. One of the cornerstones of my teaching is covered call writing. Have you heard of covered call writing? Let me explain. Covered call writing is basically you buy 100 shares. This is a good stock. This is not any stock. Okay, this is not just XYZ stock. This is stock that you vetted, that you get behind, that you've done the research, and you go in, you buy 100 shares, and you write the cover call, which is you agree to sell the stock the next month out. Have you heard of the video? You like the video? Let me show you the video. I have another sub. I'm gonna invite him up. He can help out a little bit. If he comes up. Anyways, the video is one of the stocks we look at, and let me pull it up. Let me. Here's the video. Look at this 10-year chart. Going from what, 50 cents to $115. Let's do the math on that. 58 cents, 115 divided by 0.58. 198 fold. Let's just say 200 times your money. This is why stocks are good. But we have to have what? Patience. We have to put the time in. And along the way, not only can we get the share growth, we get income, like on these cover calls. Let me go back to the cover call. NVDA. So you buy 100 shares here at 115. That's $11,500. Sometimes TikTok will give me a strike, and I like if somebody reports or whatever, so I have to start over. But hopefully, we can do a Zoom. We can do another one if there's any issues. Sometimes when I say money or dollars, they just there's like a little bot that gives me a strike. So the video, buy here at 115, and you go 1 month out on the option chain. Here's the option chain. That's what it looks like. See that? You have a similar option chain on Robinhood. This is Thinkorswim app from Schwab. I say Charles Schwab is the best. Here's the option for the video. It's showing next month. This is April. So it's March, you sell April, cover call. And let me pull it up on my computer. It's showing about $6 for the 120. So you agree to sell, you buy the shares at 115. You agree to sell the 120. 30 days out. You do it every month. In March, you sell April. April, you sell May. This is April 17th. You agree to sell the 120, and it's showing me $6. I circled it. $6 by 615. 605 by 615. What that means is they're going to pay you $6 per share or $605 for every contract of the video you write the cover call for 1 month. Let's do the math, okay? You do $600, 605 actually, 605, which is a bid over here, divided by your investment of 115 equals a return of 5.26%. 5.26% return. Now this is per month. So once you write the cover call, you're going to get $600 in your account, and then you can do it again next month. By next month, the option will expire. You can do it again. So if we can do, at least 10 cover calls per year, and I say 10, not 12, because I wanted to make it easy. I want to make it doable, repeatable. And sometimes you're waiting for the right time to sell the call, or you're waiting for the right time to buy the shares. So I just say it's pretty easy to do 10 a year. So that gives you 52.6% per year. And it gives you 605 times 10, $6,050 per year. So your investment of $11,500 in NVDA gives you $600 a month and $6,050 per year. That's why it's good. This is the cover call income I'm showing you. I'm glad you have an account, you mentioned, because now you can do the trade right away, get the money. And what I want to teach you how to do, take that leap of faith and pay your bills. Start paying bills. $600 a month. So that's your business. You're investing, 11,000 into 100 shares in the video. And you're writing a cover call monthly. That's going to give you $600 a month. That's your business, month after month. And if you're making 5% every month, how many months until you get your whole investment paid for? 5 times 20 is 100. So just around 2 years, you're going to bring in over 11 grand, and your whole investment's paid for after 2 years. Within 2 years, it could be a little bit more, but that's one of the strategies I use. And that's cover call right now. Furthermore, we can take it a level further. By the way, you have any questions on that? I'm getting a static when you talk. I don't know why. Have you gone in other lives? Can you text me in the? Are you using your phone? I'm getting some static. Can you text me a message or? Rainmaker.
Rainmaker.
I'm doing a session with Jibin, but we're having a little trouble hearing him. Can you hear him?
No, I hear the static too. Maybe you can type in your questions or comments in the chat, big dog. Just put it in the chat window.
So it's not just me; it's you too. So when he talks, I get static. Unfortunately,
Yeah, I don't hear him.
So I'm showing him about the monthly cover call in the video. Did I come through so far, Rainmaker?
Yeah, I hear you loud and clear.
We talked about some philosophy.
What's the timeline you did on that? Is that a monthly in April or May?
I'm doing April right now for the video.
Okay.
But I wanted to show him the 2 year.
Someone wants to come up named Alex on the chat here. I don't think he's a sub, but he wants to come up.
Alex, I appreciate you, but we're just doing a session with Jibin, which is a paid mentoring session, and we're learning how to retire into the stock market. So I appreciate you coming up on another live when I'm inviting people right now. I brought Rainmaker because he's also one of my teachers, one of my astute investors. Appreciate you guys. Want to give me some likes? Throw some likes up there, guys, if you're watching. Jibin, throw a question in the text in the chat. Throw a question for me because I can't hear you. You're a little bit static. So far, we just covered the cover calls. And while you type your question in, Jibin, here is the 3 years. It's at 1,000 days. I circle it. Do you see it? You can also go out 1,000 days on the video. Let me pull it up here. So your 11,000 investment, you can go out to December 2027.
Hey, Jibin, do you want to try
And
to
if you
drop?
look here, what?
I was going to tell Jibin, do you want to try to drop out of the live and come right back and see if that fixes your audio? Because I see you're trying to talk, but we can't hear you. I see you moving, but I can't hear you. Yeah, let him come right back.
I'm going to just go on to the 3 year. It's paying what if that 120 we sold on the monthly was paying $6. It's paying $40. If it's 40 by 43, we can do a limit of
42.
Limit 42. Thank you for that. So 42 means $4,200 cash advance up front. How'd you like to take a loan and not have to pay it back? It really is what it is. It's a loan. Someone said, hey, you could get a loan on your mortgage. Yeah, but if you don't pay your mortgage, they kick you out of the house.
True.
This loan for the cover call, you don't got to pay it back. It just decays after 3 years, and then you have your income. In this case, $4,200.
Right.
And let's do the return on that, by the way. You're gonna get handed up front $4,200, and the investment is $11,500. I'm getting 36% return, 36.5. How do I get 36.5% return? And see if I can get it back. And not have to pay it back and just invest. You have 3 years to invest $4,200. Get some passive income. Welcome back, Jibin. How are we now?
Thank you, sir. Thank you.
Oh, dude, I can talk. I can hear you.
Yeah, okay. Just now I hear you.
Did you hear me before?
Not really.
Not really. Well, I started out by saying the currency of the poor. This great economist once said the currency of the poor is debt. They have to borrow money to survive. They're borrowing our credit cards. They're borrowing from Fat Joe. They're living. They have a mortgage. They're paying a lot of money to their mortgage. So they're financing a car. They're always in debt. Am I right?
Yep.
The currency of the middle class is labor. They're exchanging their hours for dollars. The problem is with this philosophy, you're never going to get ahead because everything you earn, you're going to spend it.
Absolutely.
And you have limited number of hours.
And you have limited number of hours.
Yep.
And the currency of the wealthy is gold, assets, labor, leverage people's time with the business, employing people, having them work for you, leveraging your assets, real estate, buy an apartment, rent it out, get passive income monthly. So when we're doing cover calls, we're basically like an apartment owner. We own the apartment. Let's say it has 10 units. You rent out those rooms every month for income to what? Customers. For what? You can think of it like a passive income. not having to work that hard. Maybe you have to paint the apartment or fix the toilet, but you have a guy do that for you. With the stock market, you buy 100 shares, or you buy lots of 100 shares. Am I right, maker?
Absolutely.
And you write the cover call every month for income. Same way an apartment owner rents out the rooms, you rent out your shares. You're selling your upside. So back on NVDA, we buy the shares for 115. 100 shares, that's 1,000. That's $11,500, and we're getting $600 a month. I was showing you in the picture. $605 a month income. If you do the math, that's 605. Do it again. 605 divided by 11,500. It's 5.26% return. And we do this every month. We're getting you can think of this like passive income. You have to do the trade, but it's basically you're getting money back on your investment. And this option market is always there. If you have volume, if you have an option chain on your stock, if you're picking the right stock, you're going to be able to do this every month. And once you get 100% return, which is after 20 cover calls, I want you to notate in your journal. I was showing you before. You're going to get a journal, which is a real. It's not just a notebook. It's a place to put all your strategies, all the lessons.
I
You can
have
put.
one question, sir.
You have a journal.
Yeah, if you go into stock downside, that's our premium is close it.
Wonderful. Are you asking about the chart?
Yep.
On this one, the premium I circled it. This is the 3 year. Am I right? It's paying you $40. So if you have the shares, 100 shares in the video, you right away. It started tomorrow. You can sell the cover call, get back $40 per share, 4,000. If you do the limit order, which is between the bid and the ask, you understand the concept.
Yeah, if
You
delta
get
going up or down.
what?
If delta going up or down, if you're going to lose it.
Not sure. I'm not sure about your question. Did you get that, Rainmaker?
Yeah, I think. Are you asking like when you lose money on this?
Yeah, absolutely.
Okay,
Okay,
so
let me explain that.
that's a
Let me
different
explain that.
question, I
So
think.
you're
Yeah.
getting okay. So you're going to get $4,000 in your account the moment you click this trade. Sell one cover call, 1,000 days, December 2027. Okay, that money is going to be yours to invest. And you can buy food, pay bills, take it out of your account. It's going to go in like the cash portion of your account. You can use it to buy more shares. You can reinvest the money. Now, you will lose money though on your 100 shares. So if you have 100 shares in the video, 115. If the stock goes down 10%, 115 minus 10%, what are you at now?
10%.
Let me do the math for you. 115 times 0.1. You're going to lose 11.5 points. You're going to be down
Yep.
to 103. Stock goes down to 103, you lost 10% of your investment. Well, 3.5. Now, here's the thing. So your investment will go up and down, okay?
Wait, dude, Jibin dropped off. But Alex, who's in the chat, I think is following along with us, and Jibin is back.
See what Alex wants to do. Does he want to ask questions to be a member, or does
Alex,
he
why
want
don't
to
you?
just
Yeah,
does he want to just talk? Because I'm mentoring tonight.
yeah, Alex, if you can let us know, we can.
Let him if he's gonna think he's gonna teach us something, or if he's gonna listen and learn. Because if he's gonna listen and learn, I'll bring him up. Are you back, Kevin?
Yes, I am.
We got to work on your connection, my friend.
Yep.
Jibin, next
So
time you gotta.
so if the video goes down, right? Let's say 10%. It goes down to 103 from 115. So your investment is going to go down. Yes, it can even go down 20%. Okay, there's these stock market has corrections, right? Has dips, and peaks and valleys, right? But like if you're an apartment owner, right, and the real estate went down 10% or 20%, your value goes down. Your investment goes down. If you have $1 million, Jibin, and your investment goes down 20%, how much do you have?
If you're going to 20%, it's going down. I think 3,000 something else.
800K.
Yeah.
Yeah, $800,000, correct. So, but here's the thing: you can still rent out those rooms to customers to get a monthly fee, right? Same thing with the stocks. You can still do the cover call every month, even if it's $100 and $90. Like the Rainmaker knows that we've got to live at 140, at 90, at 100, at 120. We got to deal with these ups and downs, right, Rainmaker?
Well, yeah.
And we can do this right. We can get these income on the cover calls. I'm gonna let this guy in because I think he wanted to sub.
Yeah, just get him on. Let's see what he wants to talk about.
Let me see.
Alex, you can jump on. I mean, there we go. I see. All right, he's got a yacht over there. I like it. I like it.
Alex, welcome. Can you hear me?
Yes, but I'm trying to figure out how to mute and turn this on. I guess I'm on right now, correct?
Yeah, click on your picture and then you should see icon.
Welcome to the TikTok. So now you gotta find the mute button.
Click on your picture and then it should.
Okay, I found it.
Yeah.
Alex, are you interested in learning in retiring into the stock market?
Yes, I'm listening, and it's interesting. But along the way, I understand you're mentoring somebody. I don't want to disrupt.
Well, Jibin's here. I'm gonna be able to ideally to post this live so everybody can hear it again. That's my plan. Jibin was having some connection issues, but this technically is his session. And if I could get questions from you, maybe it'll help him.
Yeah, okay.
Help from the Rainmaker to explain like what's happening. It'll help everybody.
So to get us back on track, what we were talking about is how do you lose money in this? And what we left off with is, let's say you bought your NVIDIA today and the stock falls 10%, 20%. It's at a different lower price. The point is you can still keep writing these covered calls because once you bought the shares, you almost get the ability to then sell a contract against it and get premiums regardless of where the stock price is.
Correct. And that's why we use stock selection, meaning that we pick a great stock. We don't just pick crap. So we just buy a stock that you think is a good idea. We don't do that. We buy a stock that has what? It has a proven track record, 10-year chart, has PE, which means it makes profit, has high volume, which means there's a lot of volume, a lot of credits in there to support your stock when it goes down, which is a stock like NVIDIA. Even if you weren't in here 10 years ago, you can still get, for example, the cover call money. You can still get, for example, the future moves. What it's going to do in 10 years, we're not sure. But let's say if it's a good stock, it'll probably do okay. But the value, yes, the value can go down, but you can still get your cover calls. And if you, Alex, are you good with math?
Yes.
I was showing 5.26% return a month on these cover calls. Buy the shares here for 115. Sell April option for the 120 strike. Write it down. 120 strike, which is just above the strike price for this stock. You're going to get 605, which is what the option price says, per month, which is $605 income per month. Do you understand that concept?
Yes.
And then that return, if you divide 605 by 11,500, it's 5.26%. If you get 5% per month, how many months until you pay for your whole investment? At 5% a month. Jibin, you're getting some static, my friend. You were good a minute ago.
It's 20 months, you'll get 100% return because you're getting 5% a month. For 10 months, that's 50%.
So we can do this right. If we use the account management, if we use the money management and manage your account right, after 20 months, which is 2 years, and it might take 3 years. It depends on certain strategies you use. But the basic cover call on paper is going to get you, on the video, will get you 100% return in 20 cover calls or 2 years And then you have what's called, I'm going to write this down, cash cow position. Because if you have 100% return, if you put, if you're getting $600 a month and put a 11,500 here in this part of your account after 2 years, and you still have your shares, 11,500 to do your cover call, you can't really lose your initial investment. Your initial investment is paid for. Does that make sense? See, on paper, you can't really lose any money. Your value can go down, but you have your initial investment paid up on monthly cover calls. And that's one of the cornerstones, just one of the cornerstones I teach on mentoring on how to retire to the stock market.
I have a question.
Say it again, Alex.
But that depends on the strike price when it expires, correct? Or does that this just keeps going on depending on where you put your order? Because you said it. Are you out 2 years or how's that?
Okay, there's about 1,000 options for each of these stocks. I'm showing you the exact option to get the monthly money. And this is the one, this is the monthly for, that's the monthly, April 17th. You see that?
Okay, there's the date. Okay.
And then this one, and this is the monthly for April.
Okay.
The strikes are in the middle. You see I
Yeah.
circled 120? And on the left is calls, right side is puts. We're just doing calls right now.
Yeah.
And
Okay.
the bid is 605, which means that's the minimum you'll get.
Right.
The buy the call would be 605, which is a lot of option buyers are just buying these calls trying to make this money as the stock goes up, right? But we're selling the calls. We create the call by having the shares, sell the call, create the call, and sell those to the option buyers, which is automatic. Just press the button. These options all have a market price. In this case, you're given 605. This can happen tomorrow morning if you want to do the order. And every month, this option will expire, and you can just do the same cover call. There's really no downside except that there's a chance the stock will go down, in which case you'll lose the value of your shares. But like I said, you can still do the cover call. Now, let's say your shares go down 20% for the year, right? Which could happen. But Alex, if you're making 5% a month, right? And the shares go down 20% for the year, how many months until to break even? If at 5% a month, the shares go down 20%, how many months to get back to even?
4 months, right?
That's right, And a little less considering that's 5.26%, a little bit less, but let's just say 4 months. So, yeah, so 4 months, you're technically at a wash because you're losing money on your stock going down, but you're making money on your cover calls. But then what about the other 8 months? You can be in profit mode, you see? So that can happen. That's why I say it could be 2 years. Could be, maybe take you 3 years to get all your money back, There's not that many platforms where you can get 100% return after so many years.
Now, would you take in consideration, like for instance, right now it's going down? Would you take in consideration the trend of the market?
Yes, yes, that's part of the magic. If I think the market's going down further, what I can do? Do you see where it says one? See where I'm circling the 120?
Yeah.
You can actually.
I have
What?
one question.
Yes, Jibin.
Where we keep the stop loss and something else?
Say it again.
Where we keep stop loss? If is stock going down, we keep the stop loss.
In this particular strategy, we don't do stop loss.
All
You
right.
know why? Because we already vetted our stocks, which we think are great. We have PE profits, we have volume, we have good 10-year chart. So we're looking this stock to maintain. So we don't do a stop loss in this particular strategy because even if our stock goes down, I'm telling you, after 4 months, we can get 20% back.
All right.
And after a year, we're getting 50% back. So how much can your stock really go down? You know what I mean?
Yeah.
Now it's not like some Timbuktu company that's losing money that has a $5 penny stock. This is not the same thing. Those ones can go broke. I've seen penny stocks go to zero. Do you think NVIDIA is going to go to zero?
No.
So we're picking. And not only, I'm not saying to put all your money only in NVIDIA. How about putting money in NVIDIA, Apple, the stocks like this, Palantir, Tesla, I'm not saying put all your eggs in one basket. I'm showing you one trade, right?
Absolutely.
So you have a big account, break up your trades to different stocks that you like that are great stocks, not penny stocks, not dog crap quality stocks, high quality stocks. You're going to get cover call from each of these positions, bringing in money a month. Ideally, you have the money to do several positions.
All right.
So you can start with one. Hey, you got to start somewhere. If you're starting small, yeah, do one. Rainmaker. Do you have a smaller price stock that you like for cover calls?
I mean, the one that we've been trading for a little while has been IONQ.
IONQ.
Yeah, $20 stock.
Yes, it's about $20 right now. Let me pull up IONQ. Now IONQ is known in the video. I'll tell you that right now. There's more risk because
a lot more risk. It's been cut in half, more than cut in half. It's been cut in third. Let's just be rough.
The high was 54, but we got it. But when I got into it was like $6.
Yeah. So
the reason why I would do IONQ is because it's quantum computers, so it's hot, right? But let me pull up IONQ. Watch this. IONQ. So now we're going to take $2,000, buy 100 shares. IONQ. For April, it's paying. Look at this. This will blow your mind. April 17th, buy the shares here for $21. Sell the $22.50 for $2.50. It's showing me IONQ. Write that stock down. IONQ is showing me April 17th, 2025. Strike 22.50 is showing 257 by 289. So you're getting $2.57 per share, or $257 per 100 shares. Let's do the math on that. Stock price here, I'm showing 21.37 today. Let's do the math. So 2.57 for your cover call. That's for selling the 22.50 strike, which is above the stock price, divided by the share price of 21.37 equals 12%, 12.02%. Now, this is why I'm doing IONQ. Don't just do any stock. Don't just think you can go, I'm going to go to Google and pull up stock, cover call stocks. No. You get 12% a month. Dude, after 1 year, it's already 100% return.
cash.
The stock doesn't evaporate completely. You're going to have money, income, $257 a month on IONQ, $600 a month on NVIDIA. You see what I'm doing? You can pick your investment, but ideally it has a high return monthly. Ideally, it's a somewhat decent stock. There's some kind of value in it. In this case, IONQ is the pure play quantum computer stock. There's a lot of information behind that.
Here's another one for you, because I know many of you guys trade on Robinhood. Check out Hood. We've been looking into that more recently.
Let's look at Hood. Now, I don't like Hood as the top platform for investors, but Hood has a great stock. Let's look at Hood. HOOD.
You guys know Robinhood, Jibin and Alex?
Thank you, Robinmaker. Thank you, Rainmaker. Jibin has a Hood account, right, Jibin?
I have account. I'm just a beginner. I just doing the scalping.
Hey, Jibin, do you have Robinhood Gold?
No.
Robinhood Gold charges you $5 a month.
Alex, what's your deal?
Look, Robinhood Gold charges you $5 a month. They're doing a cover call on you, man. All right, Robinhood, I have $36. At $36. So IONQ, you're going to spend $2,000. NVIDIA, you're going to spend $11,500. On Robinhood, you spend $3,600. Okay, $36 per share price. I look at my next month, April 17th, and it's showing me 30, 36, the 37. How about 38? You can go $2 higher. I'm telling you, listen, I'm telling you the right option to make the money. You can do different options, okay? But I'm trying to show you I'm trying to guide you right, okay? There's reasons why I do certain strikes, okay? The 38 is paying $280 by $290. $2.80 a share per month, or $280 per 100 shares. So $3,600 investment gives you $280 a month. Let's do the math on that. 280 divided by 3,600 equals 7.7%, 7.77%, which is 77% after 10 cover calls after a year. So it's almost getting your money back more than half. By year 2, you're in cash cow mode. Stick with it. Deal with the swings and ups, the peaks and valleys. Be consistent. Do your cover calls just above the strike price, and you can retire yourself into the stock market. You can pay. You can pay some bills, build your account over time. It might take longer for some people, but when you start paying your bills, it's going to force your hand to just get that mentality of a business owner mentality, of a wealth mentality, passive income, leveraging time, leveraging assets, not changing your hours for dollars, not being debt broke, with having to pay loans, having to finance your car, having to pay your mortgages and loans every month, paying interest. You're gonna flip that script, okay? But you gotta apply it. I'll show you the different techniques.
Alex, what are you doing? What kind of trading do you do?
I trade options. I have 3 accounts. I use Robinhood, Webull, and Charles Schwab.
Okay. What do you like the most? Which platform?
Charles Schwab is good. It's more, that's the one I prefer. After that, Webull and Robinhood.
Gotcha.
Yeah, this platform is a Thinkorswim. I was on TD Ameritrade before Schwab took over, and I have this Thinkorswim app. I think it's the best one.
Yep.
Alex, you know about dividends?
What was that?
You know about dividends?
Yes.
How'd you like to get 7% dividend per year on MO stock?
On which one? MO?
Yeah.
Yeah.
How'd you like to get 9% on EMD a year? This one here pays monthly, EMD.
What is their overall 5-year? Is their company doing well, like upward trend, or was it just stable?
Yes and no. It's basically whipsaw, right? It's not totally safe as far as being steady because it's a high dividend stock. But I'll tell you, I've been in EMD for 20 years, getting dividends, and not only that, but if you look at the chart's misleading because they merged with another company. It was ESD before. They turned this symbol EMD, and because they merged, the chart looks like it was higher and then went lower, but the chart actually is not correct. I'll be there because I was the one that was there. They merged 2 companies. They merged 2 dividend companies. So it does look like it's coming down a little bit, but it's misleading because it's kind of been basically doing a whipsaw and also maintaining, I think.
What is that company called again?
EMD is Western Asset Management. EMD symbol.
Have their dividend stayed have they came up, rose, or came down?
I'm glad. See, you're asking the right question. See, the question you're asking is important because you want to maintain their yes, they're maintaining their dividends. They're not canceling or slashing their dividends. They're paying consistent dividends, and you know what? They pay us a Christmas bonus if you want to stay in. They also pay you a Christmas bonus, which they don't mention, only when you get it. So yes, the dividends are consistent. The share price seems to be dipping a little bit, but like I said, I've been in it 20 years. When I got it, I think it was $13 when I first bought my shares, between $11 and $13. So this is like a gem in the rough. You can take a look at it.
Big G, I don't even remember talking about this. This is new for me. Thank you.
This is one of my ones in my IRA. I tell my students, in your IRA, you do long-term trades. You don't do much trading, just long-term investment, dividends, long-term share growth. And your trading account is where you want to do your cover calls. And you said you trade options, Alex.
Yeah, what kind of options you do? I want to know.
Well, I take the strictly trade SPY options.
You strictly trade the SPY options. Is that what you said?
Yes.
So right now you're on puts.
Um, yes and no. I
He
don't. I
laughs.
try not to. I,
Well, tell me the trade, man. Tell me the trade. We're
I
listening.
try not to trade. I know you can make money going
Tell
both
me the
ways,
trade,
but
Alex. What trade are you on the spy? Share your knowledge, man. Now's your turn. You're the mentor now. Teach us.
I have some long positions on SPY for August.
For
I
August.
don't, yes. Right now I don't really trade the down. I trade up. Basically I try to, scalp the uptrends. I know I can go down, but I choose not to because any given time this thing's going to jump up.
And you know what,
Um,
Alex? I want to say something. I think that we're not going to have a crash. I think we're going to go higher. What do you think?
I believe so. What I believe is most of this stuff is just uh, is a tactic to get countries. Well, you know what he's trying to do.
There could be manipulation, could there? That's not right.
But I think it'll. I mean, the way I look at it is the overall. It continues to go up, SPY over time. So I stay. That's my. I stay. Looking at it that way.
Can you tell
I,
me what August strike you have?
uh, well, I look. Give me a second.
You don't have to check the one. Just tell me in general. Like, are you buying calls?
Yes, I'm buying. First of all, I have. What? Let me see here. I mean, I'll show. I look at the open interest to see how high they are. For instance, I have a position in April 5th, no, August 15th, 655. Um,
Six fifty
and
five is way out there.
yeah,
How much is that?
um,
Like pennies?
yeah, it's pennies. And I have 625. 625
So
costs
like
600
when the Dow's down 1,000 points, your options are getting hammered.
when it's down 100. What do you say? Sorry.
When the Dow Jones is down 1,000 points, which it was last week, your options get hammered.
Yeah, I mean, they're getting hammered now since it's going down. But I use 625 for my daily scalping. So I am scalping during the day. So I mean, I'm still making a profit.
How
So I
many
get
points
hammered,
do you
but at the
use?
same time, I'm making profit. So
Can you run us through a quick scalp trade? Give us an example.
okay, I use resistance support, and I also use candles for direction. Um, let's see here. Um, Sometimes, like for instance, now I'm tempted to go in the push position depending on the daily low. If it breaks daily low, which it's been doing, it continues down. I use that. There's other strategies I use if like in the mornings when I see a opportunity for the upside. That's why I use these calls for long. I mean, in August, if the market doesn't do what I think it's going to do, I can still hold on to it long term. Which I believe that by August this will turn around and it'll be a profit.
Have you ever? Do you do cover calls, Alex?
I've never done cover calls. That's why I was interested in knowing a
So,
little bit
Elijah,
more.
a quick breakdown. As you're buying these options, somebody is providing these options for you. Somebody has to have SPY shares to give you these options. Somebody has to have shares to give you these NVIDIA options, Apple options, and those are the cover call writers, and that's what we do. We get monthly income by selling the options, not buying. Buying the options, we'll do it like as a small percentage of our account, but our foundation is selling options, not buying. And if you can get this option, if selling options down, you can. It's to me, I explain it like you're the house in the casino because you're getting consistent money up front and just have to worry about where the stock goes next. Whereas if you're buying the option, oh, by the way, when you get a cover call, when you sell the option, it doesn't matter really that much where the stock goes. You're still going to get that money's in your account. But when you buy the option, you want that option to move in a direction. So when you sell the option, your stock doesn't have to move. That's the thing. Whereas when you buy the option, you want it to move to make a profit. Because when you buy an option, you have what's called time decay, correct?
Right.
So the option is decaying day by day by day, month by month. But when you sell the option, that decay works for you.
Right.
That's what I teach. As a foundation, I teach to sell the options and only buy options with a smaller percentage of your account. Am I right, Rainmaker?
Dude, that's some wisdom right there, Alex. I don't know how your account's looking these days, buddy, but the SPY's been getting crushed, you know? But it's been, and learning this way of like selling covered calls, having dividend stocks, and like hedging against, and also trading the trend, right? Like all these things. But covered calls is really like something you can do no matter what's going on. If you hold the shares, it's a good company, you know that the returns, you can keep doing it.
Rainmaker, who's the real Abhinav? Can you tell him briefly how much money you can get on your Tesla after going out like 2 years? Dollar amount?
Do you remember when Tesla was like ripping late last year, Alex?
Yes.
All right, and even earlier this year, right before it started coming down pretty fast, I sold covered calls that were giving me $3,000 a month on Tesla shares. I mean, that's
and that's income, right?
That's a month.
And how much can you get for going out 2 years?
Okay, and so get this, 2 years out, right? What we were talking about. I had
one trade, one day.
18 to 19K cash, like it hits your account for selling that 2 year lead. What can you do with that much money for 2 years? Is the next question, right? How are you going to trade that? Does that make sense? Like they give you that now for selling your upside 2 years out. So we're talking your monthly premiums. And right now Tesla is down, but you can still get 7, 8, 10K depending on where your strike is.
Yeah, but what I'm interested in knowing is, like I asked earlier, the trends. You can also sell covered puts, correct? But as I look at covered puts, those would be a lot more riskier since, like I believe that soon or whenever this is going to turn back around, would be the wrong way to go, correct?
I don't know.
I get into that on my training, Alex. You can do puts, calls, naked puts, everything. And you can pick your strategy, my friend. Is it risky? Yes. But if you know how to do it, man, you take the risk out of it.
Right.
It's like if you started a business today and you were going to sell, I don't know, tires. You have no experience. What's the risk in your business? With no experience.
Sorry, I was looking at something. Can you repeat that?
You're going to do business, right, today, but you have no experience. What's the risk with no experience? Pretty high, right?
Right.
Once you get this down, once you get the experience down, the risk comes out of it, and it's like clockwork, black and white. So when you're buying that $8 option or $3 option, there's people selling those options. They're getting $1, and they figure, well, I have 100 shares of SPY, and let's say you buy $1 option or $8 option. They're selling that option to you. You're paying $8. You're giving it to this guy that actually own the shares, which is us.
Right.
And it's a different, just on the other side of the trade. You can do both sides. I won't get mad at you, but if you have the foundation and selling the options, you're going to be, I think, at an advantage. And the difference is, we're getting 5%, 12% of IONQ, 5% of NVDA. you're looking to get 100%, 200%, 1,000% return, correct?
Right.
But the thing is what is the chance of success on your trade, and what is the chance of success on my trade, right? You have to
No,
look at
I
the
totally
basics, right?
agree. It's just less riskier. I know that the level of risk on my side is a lot higher. I
Okay.
understand that, and I see. I mean, I've been in your lab before, and I've caught on to a lot of the stuff you said. I understand the covered calls a lot more than before. Um,
Haven't you done one? I'm just curious.
because it's not that I'm not afraid. It's just that I haven't really like. And right now, I'm sitting in front of the computer, and I went to IONQ and try to find where these. Oh, here we go. How it works to purchase one. Um,
You're actually selling. You put -1, like you click on the
yes,
option, you put -1 option, not buy but sell.
yeah.
And then it'll give you
So
it'll give you a bracket, which is not a cost but a credit. Instead of buying the option, it'll give you a bracket, which is a credit. And if you look at your buying power, here's the thing, Alex. Your
right.
balance won't go up because you have a short option until the expiration. So you don't get the full benefit until the option falls off the case. But your
Okay.
buying power will go up. $200 on IONQ, $600 on NVDA, and we're getting like $2,000, $3,000 on Tesla. So the cash will increase to pay bills, to buy their stocks. But once the option's there, it doesn't actually fall off until the expiration. So you have to wait until it expires to get the full benefit. But you do get the cash up front the moment you sell -1 option.
So you were looking at IonQ. Which date were you looking at again? Sorry.
April 2250 strike. April 17th, 2250 strike was paying 250.
April 25th.
17th. It's
And what was the
22
strike here?
2250 strike.
Oh, here it is. Okay, chance of okay.
Are you on Robinhood?
Right now I am, yes.
I'm going to tell you that just throw it out. We don't go by that, but you can go by that if you want to, but that
What's
doesn't
that?
it doesn't explain really what's happening. It gives you like a textbook answer, but it doesn't give you the real life answer.
What the
So
information is?
I don't go by that where it says uh, it tells you how the trade works. It doesn't really tell you.
Oh, okay.
You're reading it to me. You're reading me the champs, right?
No, yeah, I was just trying to. I was seeing the data they have here, so I can see why
Don't
you're
go by the
choosing
data.
this one.
Just know that you're going to agree to sell your shares at a higher price, 2250. You're going to get 12% return, which is $250 per contract for 100 shares. And guess what? If the stock goes from 21 to 2250, you still make more money on your share growth. How about that? You buy the shares at 21 here, you sell at 20, make $1.50 share growth, and then you also get the premium. How about that? Now, if the stock goes to 23, 24, it'll be a sign, so it'll sell, and you'll be settled with $2,250 cash in your account, and then the
Okay, so
stock
you for
will go out of your account and you'll get cash. So you'll sell the stock, and initially it's called assignment.
okay, so you have to purchase 100 shares so you can
Yes,
sell. Yeah, okay, I
yes,
understand. I see.
minimum. You have 200
Yeah.
shares, you can do two contracts. 300
Okay.
shares, you can do contracts. If you have 200 shares, you can do one leap for 2 years out. You do one monthly on a monthly. And guess what? The leap that's 2 years out will pay you enough money to buy another 100 shares. I'm going to show you how to do that. It's called a free trade.
But from what you say, that you won't get paid out till the contract expires, right?
No, 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 no. That's not what I said. I said you get the cash up front in your
Oh, I
account
see.
to live off of, to buy food, to pay bills.
Right.
But you're going to have your balance doesn't go up because you have a minus option. You have a short option until the expiration. So you don't get the full benefit, but you do get the money. But your account balance
Oh,
doesn't go up until the option falls off. That's what I said.
oh, okay.
Make sense?
Yeah.
So I'm gonna wrap. We lost Jibin, but I hope Jibin. I'm gonna post this live. Um, are you interested in doing a session with me, or doing the whole course? I charge $50 a session and $500 for my whole course.
Yeah, I guess you're on here. You're clicking your profile, right?
Yeah, send me a message and I can give you the details.
Okay.
As we leave, do you have any more questions?
What does your session cover? Well, I guess you'll let me know in your message.
This is kind of like a session right here. I was doing a session for Jibin.
Right. Okay.
So it just goes wherever you're ready to go. If you're on level 2, I'm gonna start level 2, take you level 3. You're on level 3, I'm gonna go from 3 to 4. You know, and there's a lot, in my course. We really get done in 12 sessions, but we'll go slow or fast depending on the person. And every person has different questions, so we might go more into advanced options for one guy. Other guy wants to look at dividends and wants to look at long-term share growth. The other guy wants to focus on the covered calls. Rainmaker likes to do the leaps.
Yeah, I'll just share this because I'm gonna drop too. I found I call him Big G, and I've been named the Rainmaker because of the type of trading and the way we do things and what I've learned with him. So I'll just say I've done well beyond. I graduated. I've gone well beyond that, and having a mentor has been very helpful for me because I've been trading successfully, technically you could say, before, but this is next level stuff, especially when the market is shifting and you're in territory that where you haven't been before and you're exposed to like high risk. Like I'm just learning so much, and he really can go at the pace you're going at. So if it's like I think I've gotten way past much more out of the 12 sessions than some other people, and he posts them all up pretty much on his YouTube. So you can see different paces. But I just want to share that with you. Not like just giving my honest feedback. Like this.
Thank you,
my guy.
Rainmaker, the real, but I appreciate you.
All right, I'm gonna get out of here. Good night, everybody.
All right, man. Alex, it's been good. We'll talk more. We'll continue.
Sounds good.
Thank you, sir. God, out.
All right, take care.